Hi everyone and welcome to Crypt Talk, that Irish guy that talks about Bitcoin. So this has been the biggest, most bullish week in Bitcoin's 12-year history. Not only has it broken the $20,000 level, but it hit $24,000 this weekend. So that means that practically everyone who's ever bought Bitcoin is in profit. So if you're a Bitcoin hodler, Merry Christmas. Congratulations, you're in profit. So this episode, we're going to be taking a look at Bitcoin's next price target. Let's get started. This is episode number 26, and the title of this episode is Bitcoin's Next Price Target. But before we do that, take a quick look at this. This is the Crypt Talk YouTube channel. So if you want to stay up to date with the latest Bitcoin price action and news, go ahead and click the subscribe button. Also, go ahead and click the bell notification icon and set it to all, because that way, every time I upload a video, you'll get a notification. You can stay up to date with the latest Bitcoin price action and news. And now for a quick look at the charts. Alright everyone, let's get the basics out of the way. This is the Kraken chart. These are daily candles and Bitcoin is trading at $23,817. Let's take a quick look at what I said in episode 24 a week ago. And finally, the last thing I'm going to do, staying with the daily chart, I'm going to do a brief target calculation. So, we'll take the height of this triangle, this ascending triangle. And remember, they do statistically break to the upside. Doesn't guarantee it, could break to the downside. But let's say it breaks out today. And then we're looking at a target of 22,400. Alright, so I clearly said that Bitcoin was in this ascending triangle pattern, and if it did break out of that pattern, we would be looking at a target of $22,400. Not only was I right about that, not only did Bitcoin hit that target, it surpassed that target, and at its peak, it hit $24,288. So what's it doing now? Switching to the hourly candle, we can see that Bitcoin has done actually more of the same. It's broken out of another. It formed and broke out of another bullish pennant pattern. Now, these are continuation patterns. They're bullish and they tend to break to the upside. And as you can see here, it actually did break to the upside because it actually was drawing these lines yesterday. Now, doing a quick price target on this bullish pennant, if you take the flagpole, which was the bottom here, up to the top of the highest point. Now, if you clone this and add it to the point of the breakout, which occurred yesterday, you're looking at a price target of $27,500. Can it happen? Of course it can. Do I believe it can happen? Of course I do. You might want to go ahead and watch an episode I released a few weeks ago entitled Bitcoin is going to $30,000 and no one cares. There should be a link appearing there somewhere. Now, although I believe that could happen and Bitcoin could hit $27,500 and could hit $30,000, and the last few months, in particular the last week, have been amazing, I'm just going to go ahead and play devil's advocate here and say that crashes in Bitcoin are pretty much a certainty. With that being said, I'm going to go ahead and I'm going to calculate 3 potential price targets for 20, 30 and 40% dips, and we're going to calculate all of these price targets from the peak yesterday of 24,288. So a 20% crash would bring us all the way down as far as 19,300. Would I still be bullish? Yes. A 30% crash would bring us all the way down to $17,000. Would I still be bullish? Yes. And finally, a 40% crash would bring us all the way down to 14,428, just above that really important, that all-important $14,000 level. Remember, that was the highest monthly close in the bull rally in December 2017. It was the highest peak that Bitcoin reached last year in its rally in 2019. And of course, it was massive resistance a few weeks ago. And that's it for the charts for today. Now, if you've been following this channel, you probably know by now that every single episode I buy €10 worth of Bitcoin and see if it's in profit or in loss. So I'm just going to go ahead and do that now. Okay, so I've just gone ahead and bought another €10 worth of Bitcoin from the Coinbase exchange. I don't tend to use the Coinbase exchange because the fees are quite high. I tend to use the Kraken exchange. But for the purpose of the dollar cost averaging experiment, I do use the Coinbase exchange. So I do this every single episode. So the total invested is €150 because I've been doing this for the last 15 episodes, €10 per episode. So €10 per episode, 150 invested. The total value, as you can see now, is €209.21. So that means the total profit over the last 15 weeks of dollar cost averaging is 39.47%. Obviously, that's going to fluctuate with the pumps and dumps as the Bitcoin price increases and decreases. But as of now, that's where it stands. Now, I do this every episode to show you how to dollar cost average, as it's the safest way of investing in Bitcoin and other cryptocurrencies. And with that being said, back to the episode. And now it's time to take a look at this week's Bitcoin news. Okay, the first news article is a bearish news article. And I'm doing this on purpose because the definition of a bull market is when bearish news comes out or bad news comes out for the asset, the price simply doesn't care and moves in the opposite direction, which is exactly what's happened this week because Bitcoin has put in its best week in its entire history. So this article is by CoinDesk and the headline reads, US floats long dreaded plan to make crypto exchanges identify personal wallets. So in a nutshell, what this article is saying is that users of a centralized cryptocurrency exchanges like Coinbase who want to move their holdings, Bitcoin or other cryptocurrencies, onto their own private wallet or to someone else's would have to provide detailed personal information for transactions greater than $3,000, and exchanges would be required to report either individual or groups of transactions that add up to more than $10,000 to the Financial Crimes Enforcement Network, FinCEN. So Eric Wall on Twitter pointed out, if this proposed bill passes, your withdrawals to your non-KYC'd addresses will take 2 transactions instead of 1. For example, before this would happen, you simply send from the Coinbase or an exchange to a wallet address. But after this bill be passed, if it's passed, you would send from your exchange to a KYC wallet address to another wallet address. So it's meaningless, it's pointless. So what they're saying really is that, let's say you have a Coinbase account because that's a centralized exchange, and you send your Bitcoin from Coinbase to a ledger. You have to do a KYC for that ledger. But what's stopping you sending it from this ledger to another one that's not KYC? Kind of defeats the purpose, doesn't it? So yeah, it's probably not going to affect. This is probably just FUD, fear, uncertainty, doubt, and it clearly hasn't affected the price this week. The second article is by Investopedia, and the headline reads, "Why does Bitcoin keep going up?" Now this is basically a synopsis on the different reasons driving the Bitcoin price higher this year. So the first reason is that inflation and the lowering purchasing power amidst massive stimulus spending is driving people to store value assets, including Bitcoin. The second reason is that Bitcoin's mining reward halving mechanism further proves its scarcity and merits as a store of value assets. So this is the halving, the third halving event that occurred back in May of this year, where the block reward was halved from 12.5 to 6.25 Bitcoin every block, which are produced every 10 minutes. This is going to happen again for the fourth time. The fourth halving event is going to happen sometime in 2024, where the block reward will be dropped from 6.25 Bitcoins down as far as 3.125. The third reason is that institutional adoption as both an investment and as a service they can provide shows strong confidence in the future of Bitcoin and cryptocurrency. And the final reason they're given in this article is that the infrastructure built around cryptocurrency and Bitcoin has shown immense maturity over recent years, making it easier and far safer to invest than ever before. And the final article for this episode, I've saved the best and last. This is a very, very bullish article. So this article is by Markets Insider, and the headline reads, "Bitcoin's market cap could hit 1 trillion in 2021 as its growing reserve currency status drives adoption higher," a cryptocurrency expert says. Now, the expert who's saying this is a guy called Garrick Hillman, who is a visiting fellow at the London School of Economics. He's saying that his expectation is that Bitcoin will become a $1 trillion asset as early as next year, 2021. And the reason he's saying that is that although the 2020 Bitcoin rally was largely driven by institutional investors, he expects to see continued buy-in from more retail and Wall Street investors going forward. Now, there's been a lot of speculation as to when will the FOMO start. The institutional FOMO has started, but we haven't seen retail FOMO. That's like, the normal people like you and me, say doctors, teachers, the people who work, in bars and restaurants, like regular normal people who are actually just buying Bitcoin on exchanges and stuff like that. But maybe that won't happen. Maybe people all got scared off in 2017 and people aren't going to buy. Think about this. Back in 2017, Bitcoin was about, if you were buying in the summer, it was about as low as maybe, €2,500, €3,000. That was probably, people could probably afford that. If they saved up or if they had savings and they were willing to take the risk. But now, what average person just has $24,000 lying around it? So maybe this is not going to happen. Now, I know you don't have to buy a full Bitcoin, but I'm just saying that people don't have that type of money. A lot of people wouldn't, maybe I'm completely wrong. Let me know in the comment section. So the article goes on to say that Bitcoin has a current market cap of about 350 billion. That's wrong. It's 442 billion. And how you get that number is you take the current price of Bitcoin, multiply it by 18.5 million, which is the amount of Bitcoin in circulation. And, then you get the market cap, which is, at the moment, 442 billion. So it's massive. It's driven up as the Bitcoin price increases and more are mined. That number should go up. That number will go up. It's the only way it can go unless the Bitcoin price crashes. So this week, the cryptocurrency gained 12% over the 2 days alone and was trading at 22,994. So essentially, he's saying that in 2021, he expects the Bitcoin price to go so high that the market cap, if you take the total supply and multiply it by the price, the market cap would be 1 trillion. And here's the thing. This is the point of this article. For Bitcoin's market cap to reach 1 trillion, it would have to hit a price of $54,000 per coin next year. That's 130% rally from where it's at. Now, in fairness, would you bet against it? Looking at how good it's gone. Think back to March when Bitcoin crashed to under $4,000. Now it's $24,000. That's a 6x. So anyone who bought March, well, okay, look, face it. Anyone who's ever bought Bitcoin, is basically in profit now if you bought and held. But if you bought back as far as March, that was a great investment. Okay, folks, that's the end of this episode. So if you've learned anything new or got any sort of value from this episode, please go ahead and like and subscribe. And I just want to reiterate what a massive week this has been from Bitcoin. Not only breaking the all-time high, breaking $20,000, but also breaking it in style and hitting $24,000. And hopefully there's more to come. So this has been a year, obviously, that a lot of people would rather forget. So to all those Bitcoin hodlers out there, or even subscribers to the channel, just a massive thank you and congratulations to all the hodlers out there. So as usual, Sláinte.